Hello, everyone. Once again, this is Black Forest coming to you with another market analysis currency breakdown. We're going to be looking at the USDCAD. But before we get started to break down this chart and this currency pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and that can help put some extra money in your pocket, especially in these troubling times, okay? So with that being said, let's go ahead and break down this chart and this currency pair. So this is one of those unique charts in which what's going to be happening with it fundamentally for both currencies deals with an outside commodity, which is oil. Okay? And this is due to the traditional relationship between the CAD and oil, and also due to the non-traditional relationship between the CAD and between the US dollar and the oil. Okay? So first we'll discuss the traditional relationship, then we'll discuss the non-traditional relationship. Okay? So what is happening with the CAD is that the CAD uh, has a direct relationship with oil, being that oil is one of Canada's natural resources. Okay, so anytime oil prices go up, the dollar values goes up. Anytime oil prices go down, the Canadian dollar goes down. So even though Canada is going through the same inflation at basically the major world economies are all suffering from, and is being driven by oil, it's a very unique situation in Canada. Yes, they do have inflation, and yes, the inflation is being driven by how oil is affecting shipping supplies and ability and logistics to be able to move supplies back and forth, right? But also, it's positively affecting its currency. So we're basically in a situation where the price of high oil is negatively affecting its economy, but the high prices of oil is actually having a positive effect on its currency. So the high oil prices is affecting its inflation on its economy, but the high oil prices is also strengthening its currency. Hey, go figure. We're living in new times day and age nowadays. Okay, I just find that very funny. Okay. Now, with the USD has developed a non-traditional relationship with oil because the inflation that is being put upon that our economy is suffering from is being put upon us by the oil prices. And just to give you some brief recent history, this is basically stemming from the fact of between the Russian-Ukrainian war, when Russia decided to invade Ukraine. NATO and the U.S. got together and they decided that one of its interventions that it was going to do to punish Ukraine was to to punish Russia, was to cut off the Russia's ability to sell its oil around the world, especially to Western Europe. Okay. So when they cut off Russia's oil and caused an artificial decrease in the oil supply around the world, which caused prices of oil to skyrocket. Okay. And being that America and NATO, which is basically majority of Western Europe, were the collaborators of this, they're the ones suffering the most. Okay. So this is why you're starting to see gas prices go up all crazy, and that these gas prices going up all crazy is negatively affecting the US dollar because of more people spending more money at the pumps. They're actually spending less money at the gas. And if they're spending if they're spending more money at the pumps, they're spending less money in the economy. And if they're spending less money in the economy stagnates and shrinks and it actually causes the dollar to get weaker. Okay? But if oil prices start to go down, people will start spending less money at the pumps, then they would spend more money in the stores, and it will cause our economy to actually get stronger. Okay, so that is the situation that is happening with oil and on the oil and the U.S. dollar, and also we have a lot of negative news for the U.S. dollar compared to positive news coming out for the U.S. dollar. Also coupled with the fact that we have a lot of FUD, fear, uncertainty, and doubt now surrounding the U.S. dollar, which is solely due to um, lost my train of thought for a second, which is solely due to the impending recession that is most definitely coming. So, now, with that being said, what are we looking for in this chart to trade? So, we're still going to be looking for price to go down. So, how far can price drop? Price can drop as far as here, here, or here, okay? looking like this is going to be the new target area here. So we're going to continue to look for price to drop, especially if prices continue to go up. We're going to see a strengthening of the Canadian dollar and the weakening of the US dollar, and we will continue to see prices drop to this area here. Okay. So if you guys enjoy our content, we ask that you guys please subscribe to our YouTube channel. Subscribing to our YouTube channel will allow you to get up-to-date notifications on every time we drop new trading content. Also, we ask that you guys please like and share the videos. Liking and sharing the videos help pushes our content out there further in YouTube to build our community of profitable traders. Because our goal is to build a community of profitable traders. Okay. Also, last but not least, we ask that you guys please reach out to us and let us know what type of market analysis videos that you guys do want to see, okay? Reach out to us and let us know what type market analysis videos you want to see so we know how to best to accommodate and serve you. You can leave a comment in whatever video you do watch, or what you can do is you can reach out to us through either email or social media. The links to our email and social media is posted in the description of every video, okay? With that being said, happy trading.